Hello, Oracles! Today we're going to go over my passive income plan that I began at the beginning of this year. It took me from $0 in passive income to nearly $10,000 in annual passive income at the time of this recording. So we're going to go over that entire plan that I'm going through right now, all the different changes that I have made, and what my entire November investing strategy is going to be. I do update my plan every single month, and I make tweaks over the course of the month because you need to be an agile investor. Things change, you need to be ready to change with it. So for me, because I do both passive and active income investing, I want to make sure I'm doing both. And I like to do this, and I'll explain why in this video. So we'll get into all of that in just a minute. So before we get started, I just wanted to mention that I am not a financial advisor. You must do your own due diligence and research before investing. Everyone's financial situation is different, and what I do for myself might not work for you. So I'm just sharing what I do and the wisdom that I have learned over my life that has taken me from $75,000 in debt to a near $150,000 net worth in the last 7 years. So I'm going to be sharing all that information with you, and I do help people on the side as well, and it's really just me kind of sharing my wisdom with people to help them get through health and fitness, financial situations, when it comes to reducing debt, passive income building, and it's just lots of things that I have learned myself that I can share with others, and I am always constantly learning also. So today I'm going to share with you guys what I have done for my passive income over the course of this year, what has taken me from $0 in passive income to the $10,000 annually that I'm nearly at this moment, and I'll also share what I'm going to be doing going forward from this point. So the most common question I get asked is, how do I get started? The first thing you need to do is determine how much money can you invest on a weekly, monthly, or quarterly basis. In order to do that, I recommend budgeting yourself out. I have created a spreadsheet for myself that will track literally every single penny that I have coming in from income sources and going out to any expenses or investments. This is vital to getting yourself out of debt and financially free. And now I started this about 10 years ago on paper and pen. I have shared with many others, and if any of you guys are curious on this and want me to help you personally, reach out to me in the comments. I will absolutely help you. All my members and patrons, I help as well. So the most important thing is figuring out what you have for income that you can invest. Getting yourself out of debt is the most important thing. Some debt is okay to carry, but again, that is a totally different conversation because some debt is worth it, some debt is not. So figuring out how much you can invest on a weekly, monthly, or quarterly basis is the absolute first step. Once you have determined that, then you can determine, all right, what are my goals for passive income? How can I achieve those goals in the quickest way possible without losing any net worth along the way? So one of the things that I have learned over the course of this year is yield is awesome when it comes to passive income. You look at a dividend stock or a dividend ETF and you see a high yield. That looks awesome. Look at all the money I can get in return. But when I have started tracking these over time, I have seen some NAV erosion, that is net asset value erosion, that comes out. And this means that while, yeah, I may be bringing in a lot of passive income from these investments, but I'm actually losing value in my portfolio. And that passive income that's coming in is either not even making up for that loss, or it's just making me break even. So in the long run, I'm not actually making any money on this. So there's a lot of different strategies that I have seen. So I've blown my portfolio up significantly with passive income, but my net value has basically stayed the same. So again, we're in a very unsettled and uncertain time in the market right now. I do think this is going to turn around at some point in the future. So it's not really a big concern of mine in the near term. And when you're looking at passive income, it's all about long-term perspective. I don't mean long-term like 1 year or 2 years. I'm talking lifetime. This is something like a generational wealth type of strategy that you're looking at, where you can pass it on to loved ones in the future when you pass on. This is what I am looking at doing for myself. You can build it up over time and definitely utilize it for yourself, but as you go forward, you can pass it to the next generation. That next generation can then compound on top of that and do the same, and then pass it on to the next generation after that. When you look at extremely wealthy families that are out there, you realize that this is what they have done over the years and decades. So this is something I am starting to do for myself and for my future generations. All right, so this here is my entire investing spreadsheet. I call it the Oracle ETF. And an ETF is an exchange traded fund. When it comes to the actual market, these funds, and there are a few of them in here, are just baskets of different companies and stocks that you can invest in. For many people who are getting started, it's difficult to determine what stocks do I invest in? What companies do I want to put my money into? How do I know which ones are the right ones? It can be very challenging. Many of us don't have the kind of time to dive into these companies to figure that out. So you can go into an ETF. You can invest in something like the S&P 500. VOO is one of the ones that are on here. It's the Vanguard S&P 500 ETF. It invests in all of the companies that are in the S&P 500. That is the top 500 companies in the United States. That is kind of a safe way to put your money into the future because, hey, somebody else is doing all the work for you. You're just putting your money into it. You're going to get a return between 9 and 10% on an annual basis. That compounds over time. It's awesome. Now, if you want to beat the S&P 500, you can do things on your own. Many people do not beat the S&P 500. This is why they just go ahead and invest in something like the SPYI or the VOO. For me, I'm going to be investing in something to try and beat that, so I've created my own ETF. I've created my ETF that includes the VOO, but also has a lot of other ETFs and stocks along with it to try and build up a different strategy for myself to beat the S&P 500 and get a better return than just that. And so my ETF is broken down into different categories. The top 5 here are high yield ETFs. Now again, this here is where I'm showing you guys that, hey, I've been investing in TSLY. This is a synthetic covered call ETF that is based upon Tesla stock itself. It has a very high yield of 57%. However, I am actually down on this over the course of the year, despite the fact that it has brought in for me, we'll take a look here, over $500 in income this year. So again, that's a good chunk of change that I brought in from this over the course of the year, but I'm actually down on it and have lost money. Now, I do think that this is going to turn around. I'm going to continue holding this, but I've put a cap on how much I'm going to be putting into these high yield ETFs because they are very volatile. For me, I am utilizing the income that is coming in from these to feed all of the rest of my stocks and ETFs in my portfolio. This is how I am playing it, and this is kind of like a catalyst that is going to speed up the entire process. So in here, I have TSLY, CONY. That one there is doing very well for me. That one is yielding 76%, and I'm up $500 on the year for that. Then there is QQQY. That is actually going to be paying out its dividend this week, which should be putting me into the positive. JEPY is also negative and paying out this week. That will also put me into the positive. And then KLIP. So again, these have changed. I had a lot of different options in here. These I'm kind of changing and paying attention to on a monthly basis. Next down here in the green are my stable income plays. These are ones that have a relatively good yield, somewhere between 4% and 16%, but these things are more stable. These are ETFs and companies that are going to be growing slightly over time, but they're definitely not going to be growing as much as a high-tech company or some of the other companies on this list. But they do provide a nice stable return when it comes to the dividends. So some are up, some are down. Now we have seen a very brutal 2 months between September and October. So this is why I'm not concerned about many of these being down, because we are very beaten down. We're in fear status when it comes to the stock market. That's for another video to explain what the fear status is. But considering the conditions of the market, I am not too concerned. And this is where I'm going to start adding heavier in the next couple of months, is in this category. Next on the list is this orange. And these are my long-term ETF plays. This again, this is where VOO is. These are long, stable growth ETFs that are going to provide growing incomes in dividends over time. Again, down a little bit because the last 2 months have been pretty rough, but these are going to grow over time. When I talk about over time, I'm talking 5, 10, 15, 20, 50 years down the road. Whether I'm here or not, this is something that my son will be able to take and be able to utilize himself. This blue section here are all of the individual stocks and companies that I own. Many of these are in the VOO. Most of these are in the S&P 500. I would just prefer to own a lot of them individually as well, because they individually could outperform the S&P 500. So I choose those, and these are things that I can swing in and out of if I would like. If I see something running like the tech sector, I've got Apple, NVDA, Tesla, Amazon. If some of these start to run really high, and I think, you know what, maybe they're a little overvalued, I can trim a little bit off the top, take some profits, and put that into some of the other plays. This is where diversified portfolios come in, because sometimes when these stocks run, some of these other companies like Coca-Cola, Pepsi, Home Depot, Procter& and Gamble, those sometimes may perform better when these are underperforming. So for me, I can swing my money back and forth between the two. And then I have my speculative plays. Down here, these are speculative plays of, I think they might have a chance to do very well in the future and bring me a strong return, but there's a chance that they may flop and fail altogether. So I don't have a large percentage of my portfolio in these, but it is nice to have them because I may end up doing very well. So SQQQ and SOXS are kind of hedges against the market. So if the market is not doing well, these two do very well. So this here has balanced off because the last 2 months have been pretty beaten down. So I was positive on both of these. Then this past week, the market decided to turn around and I have gone negative. So again, I just continue to add to these when they're down, and I will see what happens when the market turns around. I also have some companies like SoFi, Palantir, Robinhood, Uber, Riot, Square, or Block, Beachbody because I'm a Beachbody coach, and these companies here I have because, again, I think they have a potential of doing something very good long term, but I'm really not sure, so I'm not going to dump a lot of money into them, but I'm going to add to them regularly to see what's going to happen in the future. And then I also have some cryptocurrency down here in my speculative plays, that is Bitcoin, Ethereum, Dogecoin, and SHIB. So these four here, again, I'm just adding to a little bit every day. I put in $1 every single day into each one of these. And for you guys who are not familiar with cryptocurrency, we have the Bitcoin halving coming up next year at some time in the spring. That means that there's going to be half as many coins being able to get mined at a time. The last time this happened, Bitcoin ran significantly and brought the rest of cryptocurrency with it. So for me, I am playing the fact that that is potentially going to happen this time around as well, because that is what has happened historically. And I am up $235 on my Bitcoin and $37 on my Ethereum already. So if we end up getting that happening in the spring, this could go up significantly and bring the other two with it as well. So down here, I break down all of these as well. So I have the percentage goal that I want my portfolio to be. So for my high yield income plays, I want my portfolio to be 2%. I want that to be 2% of my portfolio. Stable income is 35%, long ETFs are 11, growth income is 38, speculative plays are 2%. Again, I want to keep that low because you never know what's going to happen. And then just to have some cash and CDs on hand, which I do have $20,000 in CDs, bringing me in about 5 to 5.5% in interest, and these are rolling over on a month-to-month basis. So all of that combined right here, my total portfolio value is $59,486. And so my end game goal is about $1.6 million, which would end up bringing me in about $7,500 a month. So I am 3.7% on my way to that goal. My current portfolio percentages are a bit off. So my high yield income plays, again, my goal is to be 2%. I'm at 23%. But again, the reason I'm at 23% is because this is going to be the snowball effect. This is my catalyst. I dumped a lot in there to be able to get high yield income coming in early to be able to invest in these other plays and build them up quicker. And so my overall return from just the value of these stocks, I am down $121. And now my total return when you factor in all of my dividends is $897. Now when I do factor in the losses I have taken from any stocks that I've sold, I actually have a negative 0.82% return on the year. So basically flat on the year. But all the things that I have learned, I am now going to be holding long term. I'm not going to be selling things for a loss. But selling for a loss isn't always a bad thing because a lot of these high income plays that I have are taxed at regular income. I will explain that in a different video, but there's a difference between capital gains tax for dividends. When you have qualified dividends and when you have non-qualified dividends, you get taxed at regular income levels. So this here of a loss of $1,388 is going to offset some of those gains when it comes to tax time. And so the total amount that I have invested myself is $59,126.70. So this is how much money I have put in to be able to generate the $897 return that I have. Now, when you break down just the dividends alone, this is my snapshot here. So my projected income is $9,792.45 on an annual basis with that $59,000 invested. Monthly, that's $816. Weekly, it's $188. Daily means it's 26.83, and that means I'm bringing in $4.71 on an hourly basis. And now, considering the fact that I'm not doing any work whatsoever to actually generate this income, getting myself about $4.71 an hour is pretty significant. And so, also on this spreadsheet, I have broken down a little tracker guide here for what I want to have. So, this here is the amount of shares I'm going to need to reach $5 per month in passive income from the said security. So, for TLTW, I need 13 shares in order to generate $5 per month. I currently need 8.72 more shares in order to achieve that, or $241. I have that set for $10 per month, $25 per month, $50 per month, $100, and $200 per month. I have also broken down my end game goal to get to that $7,500 per month in passive income and all of the share counts that I need to achieve this. And now again, these may change over time as I go in and out of different stocks and securities, but my plan is to hold all of these long term and make the fewest adjustments needed. Now I also track over here on the side all of the different payments I have received from all of these stocks. And this is broken down by month, so every single month, this is what I have gotten paid from every single one of these. So as you can see, TSLY, which is my highest return income, has brought in $8.80 in May, $26.10 in June, $59.37 in July, $102.71 in August, $162.62 in September, and $179.88 in October. Now I'm pretty close to my goal here, so I've basically stopped adding to TSLY, and I'm just now kind of monitoring how it's going to go in the future and utilizing that income to add to all of my other plays to speed up that process. So my end game goal is 400 shares. I still need 15 to achieve that. So slowly over time, as I add $5 per week, I will achieve that. And so finally, I have broken down my total dividend income from that and then my total return based upon the value loss or gain from that security. So again, TSLY, despite that $539 dividend payout, I am actually down $403. Now, CONY, on the other hand, I have only brought in $54 in dividends, but because the stock has appreciated, I'm actually up almost $500 in that security. And this tracks all the way down for all of them. And you guys can feel free to pause this and take a look at all the different stocks and ETFs that I own. Again, not a financial advisor. I could be wrong on everything that I am choosing here. Pretty much everything in the orange and blue is tried and true and has been proven over decades to be very successful. Many of these here in the green, some are new, some have been around for a while. But again, you guys need to do your own due diligence and research. So down here at the bottom, I just calculate everything and it just all adds up together to see where I am at. And then finally, I do have a chart that goes along with this to show all of the growth in my income over the course of the year. So September did see $602 as my highest. I dropped down to $525, but that's because many of the companies that I have pay out on a quarterly basis rather than a monthly basis, and different companies pay out more for me than others. So this month coming up in November should see a significantly higher payout than both October or September. We will see how the month plays out. And again, I'm projected to be averaged out a monthly basis of $816. We'll see if we can get close to that this month. And here is my entire plan for the month of November. I will be putting this into the description down below so you guys can check it all out there. So total every single week, I do plan on investing $368. I'm going to be putting $45 every single week into my different high yield income ETFs. Each one is going to be $5. JEPY, I still want to get higher up, so I'm going to be adding $5 every single day into that over the course of November. I will change that in November down to $5. All of my stable income plays will add up to $85 every single week, and that is just $5 into each and every single one of them. The days that I picked on here that I'm going to be adding them to are just going down the list so that every single day I'm adding roughly the same amount of money. My long ETFs, again, those are going to be $5 each for a total of $25. My growth plays, these are going to be all of my individual companies that I own. This is going to be $130 and $5 each per week there. My speculative plays, again, $5 every single day. And because you can buy cryptocurrency every single day, even if the market is not open, that ends up being $7 per week. So that ends up being $58. And then I still do add $25 every single week into cash, just because if there's an opportunity that I want to buy something extra or buy something more, I want to have that cash on hand and ready to go. So again, this strategy is always changing. I have been tweaking it over time. I'm actually going to be updating my spreadsheet to have a much better snapshot picture to show value of everything that's going on as well. You guys who have been following me on X or on Facebook have been seeing the updates I've been making to my passive income posts on a weekly basis, trying to provide better information for you guys to see, and I like to be transparent with you. I'm not perfect. As you can see, I've made a lot of adjustments over the course of the year. It's awesome that I can potentially bring in $10,000 annually, but my portfolio is basically flat on the year. So my gains aren't that good. I'm definitely underperforming the S&P 500. My plan, as I have learned over the course of the year, is to be able to change all of that and then build that over time. The more I have been tracking this when it comes to dividend plays, the more I have learned that time is really going to be on your side. You can speed it up slightly with those high yield income ETFs, but they are very risky. And if they do end up collapsing, I end up losing that money and you can see the value goes down. So there's a lot of different stuff going on there. If it's something where you don't want to deal with that risk because we all have different risk tolerances, is hey, you know what? Just go with the VOO. Just go with some of those staple companies like Coca-Cola or Pepsi or Home Depot. Invest in those companies there. They're going to be good, long and strong, long term. Really don't have much to worry about them. But you're going to have to invest more time to get those to a higher yield on that dividend. But they will also grow nicely over time, so you're going to gain equity value as well as those dividends. Now, a big thing when it comes to all of those dividend stocks as well is they have dividend growth. High yield income dividends are going to be changing on a monthly basis. Sometimes they go up, sometimes they go down. Those growth income plays that we're talking about, some of those ETFs like DGRO, VOO, VYM, or if you're going to be looking at the companies like the Coca-Colas, like Apple, those companies there are going to be growing the dividend every single year. So while you may put in money right now and maybe they're paying out 27 cents per share right now, next year maybe they pay 30 cents per share. The year after that could be 35 cents per share. That goes up and up and up over time, very much like your job, where you're going to be getting a raise at your job. You are going to be getting a raise from these companies. The difference when it comes to dividend investing is you're going to be trading money for money and getting raises on that money over time. Whereas your job, you need to trade time for money. And again, when it comes to the dividends, you are somewhat trading time for money because you have to give it time for those to grow, but it's not active time that you need to put in to be able to earn all of that. It's passive time versus active time. That's really where that passive income comes in because you're passively making it over time. Hopefully this video helped you guys out. Hopefully it provided some information for you. Ask any questions you have down in the comments. Let me know if there's anything else you would like to see in next month's update. I will be doing an update like this every single month for you, so I'll be able to share with you guys my December strategy that is going forward. Otherwise, thank you guys so much for watching. I appreciate all of your support. Have a great one.